only on Bloomberg Quint.
Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is a show which gets you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Let's welcome our experts then. Independent investment advisor Sharmila Joshi, Foram Parekh of Indiabulls Ventures, and Kalra of Target Investing join me on the show. Today on Hot Money, we'll discuss stocks like Colgate, which has done well of late. Aarti Industries is trading at a record high. What's driving the rally for Aarti Industries? We'll talk about counters like BEML, which did well in trade. Will the rally continue? And since the market looks a little wobbly, we'll ask about stocks they believe should be avoided or a top sell is something that we're asking them. But let's start with the first one, Colgate. Colgate did well in trade yesterday. It's moved up almost close to 10% from the recent lows. It's done well. Yesterday also Credit Suisse report came out indicating positive views that the market is pretty much stabilized. But what should one do with Colgate? Are there still concerns with regard to competition and pricing? We'll ask our guests. So Samir, Colgate, it's moved up 10% from the lows. It's moved up very slowly. It hasn't moved up in the thing. But nevertheless, at this level, what's your view on Colgate?
So I think the rally might continue because if you see these results which went recently, there were 2 points. One is the market share gains came in slightly up, and the volume growth was there, which was higher than the let's say Patanjali growth, because Patanjali is facing capacity expansion problems, and Colgate has a spare capacity to address that kind of a market. So I think that has helped, and the herbal launches in past couple of years have helped them now in the shelf space. So I think there are certain changes, but I would still be cautious on it because the new launches have slowed down very drastically. So if you see their ad spends as a percentage of sales has come off. So I think on that the new products were the main driver of volume growth in FMCG, and if this slow down, I think there will be a pause or a stabilization of earnings.
Okay, so that's the view that's coming in on Colgate. Sharmila, what's your view on Colgate?
A positive view. I think that, what you were referring to, the competition, etc. I think, they've sort of gone through that, that cycle, because there was that perceived threat from Patanjali, and everybody thought that you will see a slowdown in both Nestle as well as Colgate. But we've in fact seen that Colgate has delivered fairly decent numbers. I think over the last 2-3 quarters. This quarter, of course, again was good. You had good volume growth, good revenue growth. And I also think that, because of the state that markets are in, where you are seeing a slightly volatile market, I think there is going to be a preference for, sort of the defensive sectors, which will continue to have the growth. Because, like the old sort of favorites like autos, etc., have, they've fallen off during the festival sales, etc. So I prefer this kind, the FMCG as a basket, and within that, definitely, I think Colgate is a good play. So I would expect, in short, the rally to continue, and I'm overall positive on the stock.
Most of the shares have come off, and so have valuations. They've cooled off, but they aren't at the valuations they were like 4-5 years ago. But are you happy with the valuations that Colgate has?
No, obviously, I mean, you would like to buy something cheaper, but the fact of the matter is that the way markets are at present, if you were to buy something, I think it would be the FMCG, and within that Colgate.
Okay, what about you, Foram? What's your view on Colgate? Do you all have active coverage?
Yeah, so we have been recommending Colgate for a very long time, and we still continue to have a buy call on the same. If we look at the result, the market share, of course, is at more than 50%. It's both in toothbrush and toothpaste segment, and again, there is a volume growth also, and I think we have seen a pickup in the volume growth. So there is intense competition from Patanjali, Dabur, but then on and whole, if they have more than 50% market share, I think I would want to still go and give a buy. Because 50% again, it's not a bad market share, and secondly, it is continuing to have a positive leadership position in both the segments. And again, we have seen the margins have been increasing. This has been a positive thing, and management is taking conscious efforts by cutting down on the employee cost and all. So I think we need to give some time, and till then we see the dividend payout that the company has been doing. Consistently dividend payouts have been very nice. This quarter it's itself, they have given an 800% dividend payout, and the return on equity is good, more than 40%. So I think if you take all the parameters, one should definitely buy Colgate at current price.
Okay, what's the target that you all have if you all have this under active covenant?
Yeah, so we still feel that more 15% upside can be seen, and yeah, one should definitely buy.
And
at
what's
current
the
levels.
risk that you all have put as far as if someone is buying, what risks should they be concerned with?
Yeah, so risk is of course increasing competition from Patanjali, and there's new trends for Ayurvedas over here, and I think Patanjali is acing in that segment. So Colgate is little slowing down in the Ayurveda segment. So, but then we again feel that management might come up something innovation in this segment, and but it would take some time. And till then, I think the toothbrush and the toothpaste segment is taken care of by having more than 50% market share. So I think on that basis, purely on the leadership basis and the return ratios and dividend payout strategy, I think we can skew towards Colgate.
Okay, so before we end on Colgate, Sami, just a word. Are you concerned about certain things that the management does that put certain things in the unlisted entity, like they did with Bombay Shaving Company? That was a small thing, but they've done this in the past. Is that a concern that you would have?
So these MNCs will have that kind of concern, whether it's Colgate or any other. Even Siemens used to have that. So they're not pure governance free risk, that kind of issue. But if you see Colgate history, as in even if you see the global con calls or Colgate listed firm is talked globally on that global con calls.
Okay.
And that's one of the MNCs where we've tracked for so many years, is mentioning every quarter, every time, being more optimistic about India. So their focus is much more on the listed side. They might do certain things which are not in favor of the listed company, but I think overall they are much more focused on driving the growth through the listed firm rather than the unlisted firm.
Okay, so that's the view. I think it's a consensus thumbs up that we're getting in for Colgate at this point of time. Our guests do believe that the potential rally in Colgate will continue. Let's move on to the next stock, and that is Aarti Industries, trading at a fresh 52-week high. The counter, let's pull up the counter. It's at 1500. It's up another 0.5% in trade. One of the very, very few counters that you will find at record highs, even when the market is extremely wobbly. Chemicals, specialty chemicals as a segment has seen a lot of traction. It's up 64% in the past 12 months. Sharmila, any word on Aarti Industries?
Yes, I think precisely what you were alluding to. I think specialty chemicals, that entire space has seen a fair amount of traction over this last year or so. And within that space, I think definitely Aarti Industries, very strong numbers. Even Q2 FY19, if you look at the numbers, very strong. And I think going ahead, also what market likes is that their sort of the multi-project wins that they've had, the fact that, you had a depreciating rupee, so they have a good export-oriented model. So all these things I think worked in favor of Aarti Industries. But I think having come to this price, maybe a further upside here, maybe another 4-5%, and then maybe you could see the stock sort of take a breather. But overall, it's a story I like.
Okay, but what's the key triggers why this rallies? Why is it that Aarti is outperforming the chemical market, or probably the other stocks? What's it doing right?
Good results.
Okay.
And the kind of there was that whole bit that we went through last month where you saw that depreciating rupee. So you liked stories which were export oriented, and they do have a very strong presence in the export markets.
Okay, Foram, any word on Aarti Industries?
Yeah, so again I second to what she said. We have seen good results, and both in the specialty chemicals and pharmaceuticals we have seen good growth rate. And specialty chemicals, which is the larger pie, has been again growing at a good 40-50%. So that is what is need to be cheered up. And we are seeing a shift from China to India, where the specialty chemical is concerned. So that again gives us add-on benefit to the stock. And we're not very sure, but there seems to be a demerger in their personal care business. So that could be one of the triggers why the stock is reacting positively. But overall, if we see, there is a good capacity utilization in every of its plant. The plant is trading at what I think 80-90% utilization rate, and the second plant is trading at 50% utilization, which the management do feel they're going to increase the capacity utilization there also. So there would this would ultimately lead to a good volume growth, and that is why we feel that this buoyancy in the result would continue in the upcoming quarters as well. And of course, it's trading at good attractive valuations also. So I think all the parameters mix up to a good numbers and a good outlook on the stock.
Okay, you all have this under coverage?
No, we do not have this under coverage.
Which specialty do you all focus more on specialty chemicals? Which are the ones that you all track?
Yeah, so we do like, I think GNFC is there, which has been doing very good. Mini Organics is there. So these are into mid-cap, segment. So both the stocks have been doing very good in the specialty chemical. I think GNFC has a good market share also. And GNFC is again, debt-free company. So GNFC looks good, and Mini Organics is also a very good stock, but due to its internal problems of, promoters wanting to increase the stake in the Mini FinCam. So it's taking a setback because of this news. But operationally, if you see both the companies, GNFC and Mini Organics is doing good. And I think Aarti Industries, when I did have a look at it, it is also on the same path, plus added by the pharmaceutical volume growth also. So I think both the segments are doing very good.
Okay, Samir, any word on Aarti Industries?
So I think right now the momentum is positive for them. The results were better off, given the pharmaceutical margins were higher than others, and the contribution of pharmaceutical margin is now going up. So they are more API led over there, and couple of capacity expansions in past couple of years is helping on the specialty chemicals. Now, majorly what I figured out is there were 3 triggers. One was the result. There were 2 bigger wins of 4,000 crores over 10 years and 20,000 crores over 10 years. So that has given a big leg up to Aarti Industries in the momentum of the stock. Now these are to be started in FY20, the revenues on the books. So I think that kind of a multiple, if you start giving it, then it justifies the valuation as of now. But for that, they have to do a big capex right now, and they've already done a 600 capex, which is going on, 600 crore. Within that time, their working capital loans have increased by around 50 to 60%. So they're taking, next 2 couple of years are very big for them. They're taking a big debt on the books. So if it's a high risk right now as a valuation concern for me, so I would like to see another 15-20% downside if it comes, and then reassess the risk.
Okay, is there any concern on the balance sheet, since you're talking about the debt and everything?
Yeah, so for the FY20 revenues, they are taking the capex in FY19, right? And then meanwhile your receivables are increasing, the working capital stretch is there, so you're taking more short-term borrowing as well. So over there are 2 kinds of debt being formed for FY20, and if somewhere there is a slowdown or the orders are not picked up, that risk will play out in FY20 for them. I think it's a risky valuation right now, which is accounting for a further revenue.
Okay, so that's the view that's coming in, or Aarti Industries. We've got slightly divergent views that are coming in. So that's the call that the viewers need to take. The next stock that we want to talk about is BEML. Now remember, BEML was on a tear at least a few quarters ago when the entire story of divestment came in, but since that didn't play out, the counter has been not doing well. Over the past 12 months, it's fallen almost 50% in trade. But over the past few days, we've seen a little bit of traction that's come back into the counter. So we'll ask our guests what they believe about BEML, what's the defense plays that they like. Foram, you all have BEML under coverage, or and what's your view?
No, we do not have BEML under coverage, and we feel that the stock should be looked at current levels. So I would say I have a positive view on the same. And if we look at the segmental revenue, I mean, what is segment the company is into? Mining and construction, railways, defense, all 3 have a very good scope, to grow in the future. We are seeing a lot of infrastructure activities happening, and railways, so the orders for the metros, companies getting, especially for the Bangalore side and all. So I think that at current levels we should give BEML a thumbs up, because the Q2 results also, if we see, the company has done quite a good in the Q2 quarter, and of course H2 is a stronger quarter for BEML than H1, so we feel that it will continue to do good. As far as I think the order book is concerned, it has a good order book of 6,000 crore, with it, and I like the segments that they are into, so I would want to give a buy call on the stock.
Do you all have any defense companies under cover?
No, we do not have any defense.
You all don't track that. Okay, Sharmila, any view on BEML?
I really I agree with everything that Foram said, but overall I feel that we've really seen no defense orders really coming their way. So it's all been just talk so far. So yes, there was an article in the paper about them teaming up with L&T, etc. And I agree, it's a niche play, and the kind of work that they do and then the kind of orders that they're likely to attract, they will only go to a company like a BEL or a BEML because they are the companies in that space. But I'm honestly not seeing that really relate in numbers. So I think, yes, it's good that there was this rally because of disinvestment, if that's your take on it. But I think that it's something that I would really wait to really see some some orders come their way in terms of defense and the size of those orders before I take a call based on that.
Okay, is that a concern, because what happened with BEL in terms of certain orders where
they said that the margins will be restricted? That's a big risk you run, in these plays, because if suddenly the government wakes up and says that you cannot take more than X amount of margin on a play. I mean, look at BEL. I think I used to like the stock. Now I'm not sure where I stand because of this reason. Because if you're going to wake up one day and say that you can't sort of profit, then I think it just puts a different spin on things. And you may say that they're niche and they will get the orders, but if your profitability is going to be reduced, that's no way for any company to be. Okay. So I'm not really very positive on either now, both BEL and BEML.
Foram, just a question, just on when we're talking about government companies, when you talk to your clients and when you advise them, are you all showing confidence not on defense companies but general PSUs as such, be it PSU banks or the normal PSUs? What's the feedback that you're getting? Are their clients concerned because of issues like this?
So we have been always advising them to not go for PSUs, but then for BEML, as we are talking, the defense segment, I think defense is a very small pie in the entire, segmental revenue. The major pie, I think, comes from the railways and the mining and constructions. So railways have been doing good. They have been getting good orders on the railway side. A lot of metro activities, have been picking up within the nation. So on that perspective, when the larger pie of the company is doing good, that gives the confidence in the stock. But overall, if you look at the PSU banks and all, we were a little positive on that side, but now again the fiasco between the government and the RBI, I think we would want to still stay away from the government related companies. And that is why when at this current juncture where we have seen lot of stocks correcting and trading at attractive valuations, we do not want to have more risk in the portfolio, and that is why shift towards the private sectors, be it the banks or any private sector companies.
Okay, what about you, Samir, your view on BEML?
So I think it's rather better to stay away from this kind of a call, because if you see the quarterly results have been very bulky, and because it's a project based company, so the revenues and even the profitability doesn't come out that well even in the good quarters. So on an annual, if you see, they're running on the highest average they ever did, but if you see the receivables, that's piling up. So I rather see a company who's doing these project works a better cash flow management rather than a margin management. And BEML is somewhere deviating from that because of the metro projects being lined up, and there are a lot of supplies which are bought in, but the revenues are getting slower by the booking center. On the other side, the defense, it's a very long gestation period kind of a projects. These are not something which happens like couple of years. Even the ordering and processing of the order and receiving the final approval takes a while. So that's another risk play which you're doing. So their capital employment is going to increase if they get into defense and the railways much more aggressively. So I would rather stay away from being.
If you want to play defense, what would you play?
So we like to play it through L&T, because if you see L&T results, the margins just spiked up from a 5% to 16%, whereas the revenues only grew by 8 or 9%. So over there, what L&T is into is much more smaller projects, and they bid it for much more quicker gestation projects, where they are able to book much more higher revenues and get a better margin. So I think that's the best play, because they are even subsiding it by the cash flows of infra and other projects. So their cash flow management for defense is much better than other companies which we see. So I think that's the best play to be there.
Okay, I think that's the view that we're getting in on BEML, not the most positive views that we're getting in on the company. And the final one is we're asking our guest which is the top short or avoid stock they believe probably could be overvalued, could be the prices run up significantly, could be there's some fundamental issues, it could be anything. We've kept it open. Sabir, which is the stock that you would recommend shorting, avoiding, not getting into?
So it's not a particular stock, it's a sector right now. It's more of NBFCs, because they have seen a jump back due to people understanding that liquidity issues are now a past story. So I think liquidity, they need around 4 lakhs in next 4 lakh crores in next 6 to 9 months, and these are top 20 NBFCs. Yesterday in the primary CP market, there was around 25,000 crores being issued. Out of that, around 5,500 crores was only issued to HDFC. So that has a power play. There are certain exceptions in the sector, but I think that's one place any bounces come. If you have it in your portfolio, try to get out of them. At least for the meanwhile, and wait for the whole situation to unfold in next 6 to 9 months.
Okay, so NBFC as a sector, what about you, Sharmila?
It's actually what you were talking of earlier, that my avoid just now would be this entire space where PSU and disinvestment related, because I think PSU banks have their own issues. Then for instance, today you read about NBFC buying some JP Infratech. I don't really see the reason why you should enter into something where you really don't know what are the sort of problems that are surrounding. So my avoid is an NTPC. We've heard of disinvestment news. Every time you see some disinvestment in NTPC, whether it's some sale of this, you see a pressure on the stock. Power as a sector is under a whole lot of issues. And they've also been talking of buying stressed assets. So you're buying stressed assets in a sector that is stressed. So I think that will only lead to further stress on your own books. So I think for me this space is an avoid just now.
Okay, NTPC and the power sector is something that Sharmila talks about, especially the PSU power sector companies, and Foram, which according to your house which are the stocks that you are telling your clients not to either square if they have positions or short? What's your view?
So we have a sell call on the IT sector. Now we have seen over the past 2-3 months the entire sector rallied quite a lot, and I think it was the only sector which was participating in the rally, and of course it was justified because of the rupee depreciation that it had. Now the fact is oil has come down to quite an attractive levels, beyond I think $65 per barrel. So it's trading at quite attractive levels right now, and I think because crude has been coming down, that's why rupee is appreciating, and when rupee appreciates, it has a direct impact on the IT sector, because of course most of the IT sectors export is in dollar terms, and that's why we feel that constant currency growth would get impacted. So we feel in the short term IT sector would see a sell off because of rupee appreciation.
Which is the weakest among all the IT companies according to you all?
Yeah, so we would want to stay away from Wipro, from the large pack of 5 stocks. So Wipro is something that we would never recommend, to the clients. Once we see good amount of selling, in the IT sector, and of course when we look at TCS and all, they were trading at 19-20 times forward PE. No doubt the results are good, everything is good, but it's going to have a direct relationship, with the rupee movement, and that is why when we know that crude is going to be at an attractive levels, as a result rupee would appreciate, so it would call for some correction in the IT stocks, and once it corrects we would want to go and give a buy call on TCS and Infosys.
But as of now you believe that
as of now we feel that
everything will correct?
Yes, we feel that there will be more 5 to 10% correction in the entire sector, and that's what we are witnessing.
Will it be much more on the mid cap side?
Probably, yeah, because mid cap is a space, you look at FSL and KPIT, NIT Tech, all these stocks rallied really quite a lot, you know. So we feel that mid-cap ITs would, because once something which, you know, moves higher, corrects even, you know, in the same pace. So we feel that mid-caps would correct.
Today it's surprising. All the IT companies, if you look at the F&O space, out of the top 10, I think 8 or 9 top drags are basically the IT companies, be it the mid-cap or large-cap, and you know, counters like, and today apparently the Nifty IT index broke below the 200 DMA. It happened a month ago, then it rallied and again it's broken. So there is selling pressure. Sharmila, you want to comment on what's happening in the IT space? Why such a sell-off today?
Yeah, I think it's clearly profit taking and the rupee appreciation.
But rupee, that's what I'm surprised. Today the currency market is shut, so people don't have a cue on how the rupee is not open.
But it's the overall correction, because now you have crude at what, 61 or was it 60?
60, almost 64.
Yeah, so you know, it's come off massively from the level that it was at. So rupee has also appreciated, maybe not to that extent, but you know, it was the whole you know, leaning of the market at that time was towards the defensive exporter. So you were seeing that buying coming into IT, you were seeing it coming into pharma, and now you're seeing a sell-off on all that, except, you know, pharma, where there is news, for instance, Dr. Reddy's today. So I think it's that, and you know, I think I agree with her on the mid-cap point, because you know, at one time we said that mid-caps have to do the catch-up with large caps, but now in fact valuations for a lot of the mid-caps are much higher than what you're getting for the large caps. So in fact, if at this point I had to buy anything in this correction, it would still be the large caps.
Okay, and before we move, just a quick word on IT. Are you seeing more correction that will come? I know that you're bullish on Infosys as such, but your view on the IT?
Just to inform that we reduced the weight pre-results, and we expected this, because what happened, the valuation stretched on the expectations that all the rupee depreciation which happened will come into the results, and this results only. That's where the miss happened by a lot of large cap ITs, and the analysts changed their kind of expectations. And I think the profit, if you have to take cash out of your portfolio right now, and for all the FIIs, it's majorly in the IT, which they've made in past couple of 6 to 9 months. So I think that's where the pressure of selling is also coming in. It doesn't have to do that much of fundamental issues. I think it's more of a taking out cash off your portfolio, and that's the best place to be, because that's the most liquid stocks where you can sell it out and create cash.
Okay, so that's the view that's coming in on IT. Probably not the most optimistic view, since the way rupee has managed to reverse from the highs that it was. But with that, it's a wrap on today's Hot Money. Samir, thank you so much for coming in. Foram and Sharmila, thank you so much for coming in. Ask BQ comes up next. Stay tuned to Bloomberg Quint.